Hello, this is Tracy Z with NoteInvestor.com, where we provide resources to help people learn to buy and sell real estate notes and private debt. And today in our Investor Spotlight interview, we have Dave Franicki of Capstone Capital USA. And Dave's been featured on Bloomberg Radio and several other media outlets. And we're excited to have him on the call today for a couple of different reasons. One, he's successfully made the transition from being a 30-year veteran of the real estate world, both investing and as an agent. And also, he's found some creative ways of dealing with the Dodd-Frank Act. And we've talked in the past about how there's opportunity to provide education in that area. And Dave's one of the people that's been at the forefront of formulating a plan to do just that. So good morning, Dave. How are you?
I'm great, Tracy. How are you?
I'm doing well. Now, you're joining us from Arizona, right?
That's correct. I'm in Phoenix.
Excellent. Yes. And I'm out here in Central Florida. So we've got modern technology working here.
Yep, in the Sun Belt.
Yeah, on both sides.
Yeah.
So let's start talking a little bit about what is the current focus of Capstone Capital.
Right now, we're focusing strictly on buying performing notes and land contracts nationwide. I find that the results to be quantifiable and predictable, and I like predictable returns.
Yeah.
versus the unknowns of the NPNs, and you don't know what you're getting into.
Yeah.
And that's a topic. Go ahead.
Go ahead. No, go ahead.
And that's a topic for another day.
Yeah, there you go. Yeah. We have similar feelings on that. But we'll leave that, like you said, for another day. So now you've been in the real estate for over 3 decades. So how did that lead to you transitioning into the note business?
Well, I was doing my REO thing here in Phoenix, and it worked out really well. In January of 13, Eddie Speed with Note School showed up at the local RIA and made his presentation. I was initially like this, and by the end of the night, I was like this, and I thought I could do that. I could just trade tables or trade shares and be the asset manager, and then I'd have the REO people working the non-performing notes out. So I started the non-performing arena, I guess really in February of 13 when I really jumped in. And then moving forward, I worked out several notes, and I saw the variables. I also saw the price points increasing, and the variables increasing, and the squeeze, and it was tough to make money on it. So after about a year and a half, I looked closer at the performing side, and I saw there's opportunity there, and that, again, I like predictable returns because I just don't care for all the surprises. So I'm now working in that arena, but what's really cool, Tracy, is I can utilize my prior 30 plus years, whether it be as building, developing, brokering, flipping, rehabbing, whatever, in the note business. So I can see it from all sides.
Yeah, excellent. So what do you feel that your company, Capstone, provides as unique benefits to sellers and people that are involved in the real estate note transaction?
Well, in any sales, to be successful in selling, you got to be consultative. You got to show the people what you want to do. You want to find out what their needs are. And by meshing the two together, you can help that. So I believe in education, being creative, sharing with the seller, the note seller, what options are there, how we look at notes, and more specifically, how the recent legislation has impacted note buying for both sellers and buyers, and how if a note seller doesn't look into the Dodd-Frank issues, they're going to be hurt by it later on. So what I recommend on the front end before anybody does anything is that they get some education or jump into my team. I work with Pat Billheimer with CTP funding. She's an RMLO. She does it nationally. So we've teamed up. So part of that education is she and I were approved by the Arizona Department of Real Estate to teach seller financing to agents here in Phoenix. And we did several classes, and we found it to be interesting to share that. But really more importantly, Tracy, it helped us to fully understand what we knew or what we thought we knew, because when you internalize it, you become you can expose it better. So that was the first piece. Then currently, Pat and I are organizing and the organizers of a meetup here in Phoenix, the Note Investors Forum. And what we're doing is fostering JV partnerships. We're there for education, but we're really clear on the front end. We're just not educators. We want to do deals. It's about money. And that's why everybody's here.
Yeah.
And additionally, I'm showing note buyers how they can utilize their Roth IRA and put notes in there and really build a legacy for their family down the road when they pass on, or just build long-term retirement, whether it be in their Roth, whether it be in their HSA. It doesn't really, whether it be a Coverdell, it doesn't matter. But notes are a wonderful tool like that. So I can, again, utilize my 30 years, put it all together in one nice package. Okay.
That's really interesting, Dave. So if you were to sum it all up, well, overall, what's your philosophy on that education part?
My real goal, Tracy, is just to set everybody's expectations, what their anticipated income is going to be of a transaction, and really manage them professionally, manage the whole transaction professionally, and communicate throughout the entire process. That just puts it in a nice little bundle, and the bottom line outcome is a win-win for everybody.
Absolutely. Yeah, it has to work for everyone, right? That's the only way the deals get done. Yeah.
Exactly.
So right now in the current market, what type of notes or transactions is your company looking to fund and work on in the note field?
I'll look at anything, but predominantly it's single family. I'll look at commercial. I'll look at manufactured housing, of course, as long as it's on its own land. I'll look at land loans too, or just dirt. But again, it's a function of value on that. In terms of price points, again, I'll look at anything, but I've been focusing on those that are $100,000 and less. It seems like that's a more viable commodity. There's more of my investor pool is comfortable with the smaller numbers and getting up in the larger numbers. Beyond that, when I'm looking at an individual unit, I look seriously at how that whole note was structured. And because the seller finance space is keying off of people that typically don't qualify for traditional financing. Mm-hmm. So with that, and you've probably seen this too in your space, because you've been at this a lot longer than I have, the sellers just don't know how to put the deals together. They don't check credit. They don't even do what a landlord does. The landlord at least hopefully checks credit, but they don't even do that. So we're seeing a lot of paper where the FICOs are coming in way less than 600, some at 5. I had one the other day where the combined FICO of the husband and wife was 550. Ouch. And the only reason it was a 550 because the husband or the wife was probably at a 650, the other one was at a 4. So it's really strange. But it's really keying into the FICOs and who that note payer is, and does all that work. That's key for every deal.
Yeah, I think that's such a big part of the education is getting the sellers to do some kind of qualifying to their buyers, because they need to have a note to one that they can resell later if they ever need to. So it affects their price, right? And
exactly.
Yeah, and secondly, for their own safekeeping, they want somebody that they hopefully have a good chance of getting repaid upon.
Well, what's ironic, Tracy, is when I first speak to a note seller, I say, I'm really glad you called. And I know you have an interest in selling your note or getting a quote, but what you're asking, when you sold that house to that buyer, you accepted their promise to pay you. So now we're talking, and what you're saying is, Dave, we want you to just accept what we accepted. And I said, well, I don't know that I can do that. I've got to verify things. So then I go through the various factors that affect the pricing. So, and the other thing I say is, nothing in life is perfect, and neither is any given note. So therefore, as we go through this process, I'm looking at to see how the note was constructed, to see where there might be deficiencies and how that may or may not impact the payer's ability or desire to repay me, because I don't want the house, I want the payments.
Mm-hmm. Yeah, excellent. That's a good script right there. People can write that down and use it.
Yeah. But it's got to be conversational. Mm-hmm. And again, the term I love to use is consultative selling. But you've got to show them what they want, and show them how they find out what they want so you can show them how to get it. But at the same time, sharing that, sir or madam, you're asking me to step into your shoes, but it's trust but verify. I believe what you're saying, but I have to verify it.
So how do you feel about loan to value? Do you feel that's important, and where do you come in on those numbers?
Tracy, that is everything. If you look back to 2008 and the crash, a lot of the hard money lenders at that time were doing loan to values of 80% or better. And as things, what would see as you track them through over 2 years, because it's easy to look back and see what happened. A lot of those folks went out of business because they were too much on the edge and being too aggressive in their price point. So take that to now. 3 months ago, I might have considered 70 to 75%. A lot of folks, including Kiyosaki, are saying that 16 could be a tough year. We're seeing the downturn or the oil issues in Texas, and I'm actually seeing properties there dropping in value. I had a BPO recently. They said the market, this was in Big Springs, Texas, that market prices in the last 6 months had dropped 8%. I bought a note in Houston in November. And at that time, Houston had experienced 44,000 job layoffs because of the oil industry. So therefore, conservative is always best. So now I'm looking at 70 or 65% to make just to cover myself in the event of issues. It's just, you got to be careful. The best way to mitigate risk is to go through with partials, because typically your investment to value there is 25 or 30%. So you're pretty well covered no matter what happens.
Yeah, I love partials too. Do you have any secrets for explaining the partial or selling the partial to a seller?
There's a couple of ways. One is, if you can imagine a ruler, and on every ruler you've got an 1/8 inch line. So just think of that 1/8 inch line as a payment. So if there's maybe 200 payments left, I'll buy 100 payments from you now, and you'll get a lump sum. Also, you'll have a smaller discount, and then the note comes back to you with the remaining amount. So you're taking less of a haircut, less of a discount. But I also, when I present my offer, I use a graph, a colored graph, bracketed, showing what they're selling now and what they're getting back and the numbers that are relating to that. I find that easy for me to understand. Some people may not relate to that, but between the two, they get it. And their biggest objection, if any, is, well, we want to get all our money now, and that's fine. Yeah. But if they're not motivated for the whole enchilada, so to speak, then the partial is a wonderful tool to get them immediate debt relief or immediate cash for something they want for their life at this point in time.
Yeah, excellent. Yeah, the ruler analogy is great. I like that. So,
it's graphic. Yeah. They can picture that. So go ahead. I'm sorry.
No, that's all right. It's no problem. So we talked a little bit about kind of deals you are looking for. What kind of deals do you feel would just waste your time?
Those that have where the buyers came in and they put no money down. Mm-hmm. And then you go back to the seller and you say, well, the investment, the value, the loan, the value isn't there. Or I had a lady call me yesterday and she put the note together wonderfully. Her sister was the payer. Wonderful. So her sister's a CPA. Wonderful. It's all good. And I said, well, what was the interest rate? 4%. Yeah. And I'm thinking, she's going to get a huge haircut, and they don't understand. And their response is, well, 4% is better than what you get in the bank. And I said, yeah, but my investors don't care for that. So that's difficult. So it's a matter of educating them, and it is what it is. But the other one that's really a loser, if you want to use that term, is if a note seller originated more than 3 loans in the last 12 months and they didn't use they're not Dodd-Frank friendly. That's a killer. Can't touch them.
Yeah, there's a lot of confusion over that. But the under the 3 can be exempt, and then the over not.
Right.
They have to be
exactly.
compliant, right? So those are the areas that investors are definitely keeping an eye out for. And I definitely hear you on the interest rate. We are in the process of closing one right now where it's a 4% rate on a commercial property.
Oh my God. They're going to get a huge haircut on that puppy.
They did, and that all comes down to they accepted it and we're closing, but it all comes down to how bad did they need the money, right? They had to have a true need to be able to sell at that kind of a discount because they couldn't go back and rewrite the note. So yeah, if you can get involved when they're creating it, you can give such better advice, but when not, then we just have to deal with the cards that are dealt. So.
But then on top of that, if you're educating the people throughout the process, it works well. So part of what I do is I have a note holder's handbook. And after my immediate interview, I get their email address because I want to capture it. But more specifically, I email them that booklet. And then in that booklet, it goes over the 6 factors that affect pricing a note. And I suggest to them that they read those 6 pages. So then when we start talking down the road, they know where I'm coming from. And it makes the whole transition from interview to pricing so much easier if they're open.
Yeah, absolutely. If they're open and if they have a need.
Exactly.
So speaking about deals, what do you consider some of the best methods to find the performing notes that you're buying right now?
Your best way is networking and building that up. And for me, it was a function of getting out of my cave and getting back to working a lot with people, because with the REO, I could work in a cave and not worry about it. I'm doing a lot of mailing now, and that's a tough road. It's a learning curve, but it's a great educational curve. So it is what it is. The meetup that I've got is a good one too, as it relates to the buying side. But really outside of that, if you just get in the educational mode and talk to people, they'll come to you because they'll learn to like you, trust you, and the deals will come to you.
Yeah.
In addition to that, and I'm using, of course, you're helping me with that too, with your company, and the first thing that Eddie Speed said was, get a website, get a domain, make it look like it's a 10-story building, have a professional look, and just do whatever optimization and blogging and whatever else, so you can get the leads from different sources, different resources. Because the more leads, the more aggressive you can get on pricing, and of course, the bigger your payday is going to be on a monthly basis, and the more people you're going to help along the way.
Yeah, excellent. So all the tried and true methods. So speaking about marketing, what kind of advice would you give to new professionals that were just getting started in the industry?
Learn. There's several people that I know, they say, well, they don't want to pay for mentoring. We can just go online and do it. We can do this, we can do that. For me, I have to be a sponge, and maybe because it's detailitis, maybe it's not, but I want to know what I'm getting into. I found that it's not overnight success. You just have to keep working at it. So what I did is I joined the Eddie Speed mentoring program through Note School. It's been a phenomenal process because I can go on to their calls during the week, ask my questions, get answered. Eddie drills down, and he can make you really feel uncomfortable on a call sometimes. And that's okay. But it's all about learning. They're top shelf. And I also attend various conferences. I met you at a noteworthy conference, you and Fred back in, I guess it was 13 in Dallas. Paper Source is another one. And then, of course, keying off of our initial meeting, I've been keyed into your educational processes that you offer through Diversified Investments. And that really pushed me off center in several areas. So I think all that is what's needed. And then, of course, if you have your own network of other note folks around you, you can bounce things off of them outside of the normal mentoring process.
Yeah, excellent. So what do you think are the most common mistakes then that you see people make getting started in this business?
Whether it be notes, whether it be real estate, a lot of people think that success comes in a box. Pay the money and you're good to go. A friend of mine here in Phoenix, we started a small note meetup keying off of the Speed students, and all the people came in. They thought, okay, Jason and Dave, they're going to teach us everything we need to know, and they don't have to do anything. But it's but and that's good in its own way. But again, you've got to plug in. And as you and I were talking offline, your biggest enemy is looking at you in the mirror. You've got to be, you got to be, accountable to yourself and plug in. But the biggest obstacle is yourself. But you get training, and more training, and more training, and more training, and then it becomes a natural, and you speak it and you live it.
So you've touched on this a little bit, Dave, but given the current economy, have you made any changes in the way you're transacting note deals?
Absolutely. It's very pertinent. In addition to what we talked about with Kiyosaki before, I'm just very, very conservative in my quotes. On partials, I'm pricing up the yield that I'm looking for. Even on fulls, I'm pricing up the yield. I'm promoting partials more. I'm buying the ones that I keep. I'm buying them with shorter windows. I bought one in Houston that only had a 24-month window because things can change very, very very, very quickly. And it's easy to look back and say, I wish I could have, should have, would have, whatever. But if you're being proactive on the front end, then you miss the failure on the back end. So I think safety is key where we are right now. And that's probably against a lot of people's thought process. But having lived through several recessions, I'm finding that just being conservative and cautious is a big, big thing. Because if you're not, it's too late later on.
Yeah, that's what keeps you in business for years.
Exactly.
Now, I was wondering, do you handle commissions to brokers or consultants? You talked a little bit about JVing, so do you work with people that way?
I do. When I sell product to other folks, FNAC is one and whatever, and typically it's an assignment of contract, and they get a brokerage fee. In other words, I'll quote X, and then they can tell their people why, and they can take whatever spread they want. Like with FNAC, I'll get a quote, then I'll come back to the seller and I'll decrease that quote by X number of dollars. JVing, I have a friend here that I met through the notes school. He said, I'd like to buy some stuff. I said, great, let's just put it together, just a regular JV agreement. And we come in halves on the money, whatever it is for the people, whatever's fair and good and a win-win for everybody, that's what I do. So the answer is yes.
Excellent.
I think it's very, very, very good to do that.
So just to finish up, where can someone contact you if they want to obtain more information?
Okay. My email address is dave@capstonecapitalusa.com. It's dave@capstonecapitalusa.com. Or you can call me on the Phoenix number, which is 480-763-8376, or my toll-free number, which is 888-861-4292. And I can be texting my cell if they want to go that way, which is 480-232-5477. And any of those models are fine.
Excellent. And we'll be sure that we have the transcript of this interview as well as those contact information and a link to your website underneath the video on our website at noteinvestor.com. So, Dave, I really want to let you know that I appreciate you participating in this interview. Thank you for being so sharing and open to give some good insights to how you operate your business.
Thank you, Tracy, and you are the best. Thank you very much.
Thank you. Have a great day. Enjoy the sunshine.
Okay. Take care.
All right. Take care. Bye-bye.